Citadel draws fresh scrutiny from the SEC in new risky bets. What is going on, guys? Lottery Socks here. Welcome back to the channel. Welcome to the channel if you're new. Today we are going to be talking about Citadel, what the SEC is doing, what major banks are doing, what's happening with US default, and essentially what's happening with the S&P 500 correlated to Bitcoin overall. This will affect meme stock plays. This will affect every single stock within the stock market, as well as the economy as a whole. So without further ado, please hit the like button if you find value out of the video or enjoy watching the video. Hit the subscribe button, drop a comment. Let's get into it. Citadel, amongst other hedge funds, is under fresh scrutiny from the SEC due to risky bets that are heightening systematic risk in an already shaky economy. Officials at the Securities Exchange Commission and the Federal Reserve have questioned prime brokers about leverage trading as, in quotes, the dangers have been heightened due to political brinkmanship around the debt ceiling that has threatened to sink the US into default and unleash chaos in the financial markets. In other words, Citadel, amongst other hedge funds, so Citadel and other hedge funds in particular, are being questioned by the Securities Exchange Commission and the Federal Reserve about leverage trading and the heightened dangers to it due to what is happening around the debt ceiling, which is something that threatened to sink the US into default and unleash chaos in the financial markets. In quotes, several of the hedge funds that have recently pursued the so-called basis trade were also active in 2020 when the outbreak of the pandemic upended the treasury market and caught them wrong-footed until Fed officials intervened to restore normalcy. Basis trading is a trading strategy that seeks to profit from perceived mispricing of securities, capitalizing on small basis point changes in value. This list includes Citadel, Millennium Management, Expedis Point, Capital Management, and Capula Investment Management, according to people familiar with the matter. Opaque and risky, the strategy has long spooked watchdogs. It involves borrowing heavily in the repurchase market and using that leverage to exploit the price gap between treasury futures and the underlying cash market. The trades in some cases have been leveraged 50 to 1 according to two of the people. The strategy's popularity is alarming to SEC Chair Gary Gensler specifically, who is on a mission to subject large speculators to more regulations. In quotes, he says, "There is a risk in our capital markets today about the availability of relatively low margin or even zero margin funding to large macro hedge funds." Overall, guys, the Federal Reserve and the SEC is basically stating that now we are in a troubled spot as to where Citadel and other hedge funds, those old investments that are risky, are now insanely risky due to what's happening with the US economy. This is heightening risk and essentially could start many dominoes to fall going forward. Speaking of Citadel, it just so happens that Citadel Securities' GameStop position heads deeper into call positive, with the recent 13F filing reporting call option 3.3 million shares to put option at 1.7 million shares. You know on the channel that we have been calling GameStop, and I do still hold my GameStop calls as well as my AMC calls, but you know that we have been hyped for GameStop. Also, they have earnings coming up next week, so keep that in the back of your head as well. Now, we've talked about how the DOJ in the next few months will be investigating short sellers, but not only that, actually taking action on short sellers. Speaking of the SEC and DOJ, the SEC amends Form BDW, in quotes, request for withdrawal from broker-dealer registration effective immediately. Now, in a simpler way, the SEC is an organization that regulates financial markets and protects investors. They recently made changes to the document called Form BDW. This form is used by companies or individuals who want to stop being registered as a broker-dealer, which is a type of financial intermediary. The excerpt is saying that the SEC has made some amendments or updates to Form BDW, and these changes are now in effect. This means that anyone who wants to withdraw their registration as a broker-dealer needs to follow the new requirements outlined in the updated form starting immediately. I know a lot of people were trying to figure out what this means. The SEC made a change to BDW according to ChatGPT, in which anyone who wants to withdraw as a broker-dealer has to comply with the updated information in Form BDW. Moving on, NYC Comptroller joined NYC Mayor and Department of Finance in limiting City of New York deposits at two of the banks. The Comptroller also voted against designating three others that failed to submit required anti-discrimination plans. 26 banks were designated after first ever Banking Commission public hearing, new procedures for certifying banks, practices for non-discrimination, and stronger scrutiny for soundness in light in recent banking failures. Following the first ever public hearing held by the New York City Banking Commission today, all three members voted to limit deposits at Capital One and KeyBank after the banks failed to submit required plans for demonstrating their efforts to root out discrimination. New York City Comptroller Brad Lander and one of the three members of the commission also voted against designating three other banks to hold public funds: International Finance Bank, PNC Bank, and Wells Fargo. In quotes, bank seeking to do business with New York City must demonstrate demonstrate that they will be responsible managers of public funds and responsible actors in our communities. Unfortunately, despite several opportunities to do so, 5 banks failed to comply with the New York City Banking Commission's designation process, leaving us to conclude that they are not taking meaningful actions to combat discriminations in their operations and are not responsible stewards of public dollars. This is an effort to strengthen oversight over the banks that profit from public funds. Now, they're approving 26 depository banks for 2 years. However, they're limiting deposits at Capital One and Key Bank, and notice that they did not list Wells Fargo in here. Interesting, right? Overall, we're in a position where every single entity is walking on thin ice, and now they have to figure out which bank can actually comply at protecting the funds of the public that are in their accounts, or at least they're trying to show you that they're doing so, even if they're not. On top of that, the United States' world's largest bank, JP Morgan, has just laid off 1,000 employees, which according to this article is creating panic. Keep in mind, this equates to about 15% of its roughly 7,000 employees. Now, the Fed's favorite inflation gauge rose more than expected in April. It rose 4.4% year over year in April 2023. This is the PCE, the personal consumption expenditure, up from the 4.2% surge in March and above the expected 4.3% rise. Data suggests that inflation is showing symptoms of stickiness, boosting projections of further Fed increases and supporting the FOMC's indication that borrowing rates will have to remain higher for longer. And the Treasury's cash plunges below $15 billion as debt limit fight drags on. Negotiations ongoing in Washington to find a debt ceiling deal, and the T-bill markets indicate a concern among investors about a default. The government's cash, to be exact, plummeted to $49.5 billion from $140 billion in just 2 weeks. Now, that is just to put it into perspective for you, as Bloomberg reports accounting gimmicks are being used to dodge a breach, with a war chest of $92 billion tricks remaining. Feels more like James Bond thriller than a government, and I can agree with this statement. Plus, the federal outlays is still not slowing down, meaning the government spending is still growing and the debt ceiling is still a huge problem. In order for the US to not default at this rate, they would probably have to cut spending all as a whole. As someone on Twitter states, this usually ends in the country going to war with everyone and refusing to pay. Historically, counties have gone bankrupt in this situation, but USA is not there yet for a while. I'm sure there's a study out there predicting when that will happen. You guys let me know what you think is going to happen. Do you think war is going to break out, the US is going to default, both, or something else? Also, my sentiment stays the same, that the S&P 500 is going to sell off even further in the coming weeks. The SPY is sitting at 420.17 currently as I'm making this video, and what I have overlaid in orange is actually Bitcoin, which we talked about before can be an institution stash pot. When Bitcoin rises, chances are the S&P 500 will rise, as institutions are loading back up on Bitcoin, as it's something that is hard to move, as well as the S&P 500. This is not likely retail doing the same thing, but what I wanted to point out is Bitcoin has been tracking with the S&P 500, to be exact, over the past couple of months. You can see in January it came up and it peaked right here the same exact day the S&P 500 peaked, and it sold off and had a bottom as soon as the S&P 500 had a bottom the same exact day. However, it came up recently and peaked with the S&P 500 and sold off even further, and the S&P 500 headed for a new peak. In my opinion, institutions are trying to fake out retail, and this is going to be one of the largest bull traps that we have seen that is about to happen over the next couple of weeks. Keep that in mind. The only way that this is not the case is if Bitcoin does start to scale up and have a next leg up over the weekend, creating another higher high and higher low. Overall, guys, this is what I got for you for today's video. You let me know your thoughts in the comments down below. Make sure to hit the like button on your way out, hit the subscribe button, share the video, get up to 20 free stocks for just signing up for Moomoo, getting an account and making a deposit in there. It can literally be a penny that you find in your room, throw it into your account. Each stock is valued up to $2,000 per stock, so you're getting a chance at $40,000. On top of that, if you're from Australia, you're getting a guaranteed 10 free AMC stocks plus 10 more when you deposit. Also, join the Discord. The link is under that link as well. Both links are under the video, and I'm going to leave them pinned in the top of comments as well, so you can have easy access to pop in the Discord server. Overall, that is it. I love you all. Peace.